Let's come back to the present. And today, let's talk about opportunities and challenges for wealth practitioners in the post-COVID world. To begin with, I would like to invite our moderator for this session, Mr. Nick Pollard, the Managing Director, Asia Pacific of CFA Institute. Before I hand over the floor to Nick, let me introduce him. Nick joined CFA Institute in 2016 as the Managing Director for Asia Pacific. Based in Hong Kong, he oversees operations in two of the largest economies of the world, which is China and India, apart from 20 other societies. Nick is responsible for working with all stakeholders within CFA Institute, including employers, universities, and members. Prior to CFA Institute, Nick was in a senior leadership role at Royal Bank of Scotland, Coutts Asia Division, and most recently, he was the head of international learning and professional development for Coutts International. He began his career with NatWest Group, subsequently part of RBS, where he gained experience in wealth, marketing, and talent development. He has earned his BA from University College London and has lived in APAC since 2009 in Hong Kong. Nick, welcome to the session, and the floor is all yours.
Thank you very much, BD. It's been a long time since I've seen you, and it's a pleasure to see you. And it's a pleasure to be here this evening and speaking to all of you. In fact, it's so nice to be attending the 5th Indian Wealth Management Conference, if only virtually. And I'd like to thank, before we begin, CFA Society India and my team in Mumbai for working so agilely in these difficult times to come up with such an interesting agenda. And hopefully, fingers crossed, all the technology works and we have a very interesting evening. Because actually working through these difficult times is what this next session is about. As BD said, we're going to explore opportunities and challenges for wealth practitioners actually during COVID and then maybe post-COVID. And I'd like to focus on three specific areas: on client needs and behaviors, how they're changing, and how we think they will be changed forever, maybe by the end of this pandemic. How technology and the use of technology is changing during COVID, and what that might mean for the skills that we need in terms of giving advice. And also more generally, what's happening in India, what's happening in the world at the moment in terms of regulation, in terms of new skill sets, in terms of products, and in terms of client appetites and needs. And I'd like this to be more of a conversation than an interrogation. I know having met Soumya and obviously Marg, my boss, I think both of them will be very happy to have a very interesting discussion. So let me introduce our two guests this evening before we begin. And there couldn't be two better guests to talk about this particular issue. Soumya Rajan is the founder of Waterfield Advisors, India's largest independent multifamily office and wealth advisory company. She has over 25 years of financial service experience, much of which was spent with Standard Chartered Bank. And in her last assignment, she was managing director and head of private banking for India. At Waterfield, Soumya advises many of India's leading family businesses on a wide range of issues, and the company manages over $3.5 billion in assets. Soumya also sits on a number of non-profit boards and has been recognized as one of India's top 100 women in the world of finance. A very warm virtual welcome to you, Soumya.
Thank you.
Marg Franklin CFA is the president and CEO of CFA Institute, having taken over the reins almost a year ago to the day in 2019. She's been leader in the investment management industry for over 25 years and was most recently president of BNY Mellon in Canada and BNY Mellon Wealth Management in Canada and head of international wealth management for BNY in North America. Her deep practitioner experience has been gained at Marriott Private Wealth, at State Street Global Advisors and at Barclays Global Advisors. Her experience, however, with the CFA Institute also runs deep. Marg has been a serial volunteer on many of its councils and committees and is a former chair of the CFA Institute's Board of Governors. A very warm welcome to you, Marg. I know you're coming from London today, so it's lovely to have you with us.
Great. Thank you very much for having me.
So to get things moving, I'd like to explore views from both of you on how you think COVID has affected our clients' needs and behaviors. And in particular, whether you think during the pandemic, during the experience, these behaviors, these needs have changed. And maybe I could ask you to kick off, Soumya, in that context.
Thank you, Nick, and thank you to the CFA Society for inviting me to this discussion. I think when COVID actually hit, for a lot of wealth practitioners, we had to actually have two kinds of responses. One was the immediate response to the crisis, which actually happened. And in that scenario, we were dealing with two major issues. One, of course, was just issues around personal safety and health of our employees, of our families. And the second was really managing client expectations, because markets corrected fairly sharply. And what we had to do as an immediate response was to also figure out how is it that clients could actually transact? How could we continue to remain engaged with them when everybody had pretty much started working from home? And also the fact that we needed to start helping them in terms of how do they move into a kind of virtual world and digitized world in transaction execution. This is actually quite new for India, because the industry itself has always been fairly dependent on face-to-face contact, face-to-face physical execution of papers and transactions. So this was all very new and had to happen quite suddenly for most practitioners. So I think what we were dealing with was first an immediate response in terms of just a new way in which we had to deliver. And the second was really managing client expectations, because clearly they saw a very sharp market correction and we needed to really hold their hand at this point of time. So two phases of trying to work with clients. One, the immediate response. And I think where we are right now is towards the tail end of that. And now looking at really the newer opportunities which are emerging as we actually begin to stabilize platforms.
Have you, just to follow up on that, Soumya, have you seen a different attitude in terms of investment horizon, risk appetite? I'm wondering whether that's stayed constant through COVID or whether it's changed during that period.
My own sense is that for most clients, I think what we needed to do more than anything else was to continue to hold their hand to say strategic asset allocation matters, and really look at this time to say that even if markets have corrected, it is an opportunity for you to in some ways balance that portfolio. So I think what was very important for wealth practitioners is to be able to stay the course, particularly when there's volatility. So to that extent, I think fundamentally, whether it was risk appetite or whether it was investment horizons, I think it's incumbent for us as wealth practitioners to have a slightly more mature, to be able to handhold the client at these situations, to say that, you know, this too will pass. But if we have to make any kind of tactical investment allocations, then how do we go about doing that? Because clearly, if there is a very sharp correction like what we saw, and it just didn't happen in India, it happened globally, were there specific products that we would get into? Were there specific areas that we should look at in order to try and move clients there? One classic example is gold, for instance, where we actually started taking a tactical allocation there. Because we just saw that you wanted a safe haven asset in some ways. And that uncertainty continues even today. So I think to that extent, what you were trying to do is really hold the hand of the client and manage client expectation to make sure and tell them that this is an opportunity as well. It is not just about a correction which may have happened in markets, particularly if they were staying true to this strategic asset allocation for the longer term.
Okay, thank you, Soumya. Marg, I was reflecting before I came on the air just now that the very first conference I ever went to in private banking was called Managing in a Time of Uncertainty. And that was a long time ago. It feels like nothing's ever changed. And as we're going through a period of intense uncertainty, the need for clients to be advised through that obviously becomes heightened. Have you noticed, as you talk to your peers around the world, a greater acceptance from clients, both to ask for advice and also to act on those advice, which has also always been one of the great challenges of managing a wealth management business?
Yeah, so I think, Nick, that just plays so nicely off of Soumya's comments, which I wholeheartedly agree with, that the advice component, which we've tended to underrate, undervalue, probably because we don't put such mathematical precision to it, is extraordinarily valuable for clients. And so I think the ability, there are two skills that are required. The first is, I think, that which we know of as CFA charter holders and as professional practitioners, is deeply understanding portfolio construction, security, selection, how you build those portfolios to meet the needs of clients. But that's predicated off of understanding the client more deeply. And I think we have much greater appreciation for the behavioral management side, which Soumya talked about, because the most destructive of all behaviors and most prevalent in individuals, irrespective of the wealth size, is to have emotional responses to short-term market volatility. So we know in our most recent trust study that individuals that have a financial advisor, that have somebody who's competent, are much more likely to succeed and not abandon a well thought out program. And of course that makes sense because they understand it, right? They've been educated in it. The wealth manager has taken into account all of those things that are particular to the client. I think what's interesting in a COVID world, and what we've seen when we convened at CFA Institute a small group of 25 CEOs of leading asset managers, almost all of them have a wealth management component. And what they said is really universally clients stuck to their programs. Now, maximum uncertainty, I think those tactical moves that Soumya pointed out, are more available to individual investors. They're carrying on average globally much higher cash levels, for instance, than a pension plan or sovereign wealth fund would. So those tactical moves are more available, but of course there's more uncertainty and it's individual, right? You don't have the benefit necessarily of pooling. So those cash balances tend to be there for a reason. We have heard that people have really stuck to those programs, and of course that served them well. And when you say managing in times of uncertainty, I think the feature of the last 10 years is those moments of maximum uncertainty tend to be much more compressed. They tend to be shorter. So where you had time to respond in a different way, that doesn't seem to be the case so much anymore.
Thanks, Marg. And I couldn't agree with you more. I think it's great to hear that the sense is that clients are sticking to those programs, because clearly knee-jerk reactions, emotional reactions at this time is something we're all trying to guard against. But you mentioned there the sort of individual client response. I'm getting a few questions about, if you like, government response or regulatory response, and I wonder, as you talk around the world, Marg, who has particularly impressed you from a regulatory perspective in terms of their response to the pandemic?
Right. So I think, from a regulatory response, I think there's been a pretty universal opening up of the spigots of governments trying to do the very best they can. That'll be interesting to see what the long-term consequences of that are, because this follows on the heels of really 10 years of pretty loose central banking activity and quite ingenious, innovative responses to actually keep things flowing. At some point, inevitably, there'll be some reckoning how that manifests itself. I think I wouldn't want to hazard a guess. But I think, again, wealth managers and those that are well-trained and ethically oriented will build in those buffers, those protections for clients. The regulators that do impress me, though, are the ones in the investment space that are thinking about those investor protections. So that includes transparency of costs, proper disclosures of investment funds for those that are done, this real focus on the cost to the investor. If you think about the landscape that we're facing of a lower for longer return, the ability for clients to generate a meaningful return after taxes, after fees, and after inflation, as modest as inflation is, I'd hazard a guess, and Soumya, I'd love your view on this, that the old 7% nominal is now somewhere between like delivering a 4 to 5% return. And irrespective of why that builds up, and of course we've had a good decade of great returns, largely by liquidity injections, printing money. When you think about building up those portfolios, it doesn't matter. People are still, the world's most sophisticated investors on an average portfolio are looking at 4 to 5%. It becomes very challenging if fees are high, particularly when you look at the composition of the portfolio allocation, which includes much more alternatives, much more high cost product to get to that nominal rate of return. So it is, I think, an incredibly interesting but challenging time for wealth managers to keep the big things in mind, right? Risk, return, net return, liquidity. Liquidity is always underappreciated until you need it. So Soumya, I'd love your views on portfolio allocation in what has become the new normal, not so new normal.
And just to kind of continue from where you made the point, also, Marg, and Nick's question on regulation, I think one of the things that we're clearly seeing is that pre-COVID and post-COVID, society by and large is looking for a better world post-COVID. So interestingly, when you looked at some of what was happening in the Eurozone, so while central banks were actually printing large amounts of money, if they were actually going to be giving money to some of the industries to bail them out, they actually said that we want to link it to your carbon footprint going forward. So in one sense, it was trying to link sustainability at one level, which as compared to certain other regulators and central banks around the world. Now, I think that's also going to be a theme which is going to play out much more in terms of the fact that the post-COVID world that we're looking for in terms of principles around ESG, principles around sustainability, climate change, are all going to be quite key to the kind of investments that investors are going to look for. And what we see is that a bit of that ultimately is probably going to be pushed by the asset owners because they want a better post-COVID world. Whereas what we're seeing right now is that there are asset fund managers who are actually trying to push that agenda. Certainly in a place like India, it's really coming from the asset management companies to push that. Whereas I think what we're going to start seeing is a little bit more of around the asset owner pushing that agenda going forward. Just to also look at just in terms of just the advisory concept as in terms of what the regulator was doing. Certainly in India, the regulator has been pushing much more for advisory. They started with the investment advisor guidelines in 2013. They've refined that now just a few months ago, where they've made it far more prescriptive, where they've actually said that a client has to either be a distribution client with a wealth firm or an advisory client with a wealth firm. I actually think that plays in quite wonderfully well to many of the members in our audience as CFA charter holders, because ultimately, what is the CFA Society trying to do? It is promoting the ethical and professional standards for the investment community. So in some ways, this shift that we're kind of seeing in advisory in India, and right now it's, when you look at Asia wealth, which is about 34 trillion, and managed accounts or advisory accounts are only about 15 to 20%. of the managed assets, you realize that this shift is going to be fairly pronounced, and wealth managers, CFA charter holders are all going to be quite in demand, who can actually understand this new language, which is going to sweep across Asia over the next 5 to 10 years.
Soumya, thank you for that ringing endorsement of the CFA charter.
Yes, thank you.
I mean, I'm a sincere believer. I'm a sincere believer in it.
But on that note, one of the underpinning issues around that shift from towards advisory is that element of trust required in the advice that's being given. And I looked at your website, Soumya, and written throughout it is about ethics and about trust, and clearly that's dear to our hearts at CFA Institute as well. I'd be very interested. How does Waterville live these values? How do you ensure that your clients not only read that on your website, they feel it as one of your customers?
I think the biggest way in which we've actually been able to do that, Nick, is really not to manufacture any products. The fact is that the moment you start having any proprietary product that you actually manufacture, then there is always the temptation in some ways to push that product into a client's portfolio. The fact that we are completely open architecture actually is what gives us the edge. And this is really what we're kind of seeing across other wealth management firms as well. They're having this big dilemma because India never had a investment advisory concept before till 2013. So till then, the entire model was distribution led. So how do you now, as a wealth management firm, actually try and reorient and try to create those, at least from the client perspective, that you're going to be neutral? For us, I think it's been easier. I think for a lot of existing practitioners, it's going to be much harder, because they're going to have to demonstrate, given that they have a product, a manufacturing arm as well, how are you going to be able to say that I'm going to be completely neutral? Mm-hmm. Quite interesting that in some ways, when I talk to clients, they actually say that, when we're working with these firms, we're going to tell them not to show us any of those, their in-house products. And I actually turn around and say that you may be missing a great product. Because you've kind of self-selected out of it. So I think those are some things that clients are also going to have to learn to appreciate. And again, the wealth management practices that offer both, I think it's going to be quite hard for them to draw those Chinese walls.
And having been in the business some time ago, I think it's a long-standing issue that to try and reinvent yourself in that context is tough. Marg, you mentioned the trust report that CFA Institute has issued fairly recently. And within it, there's talk of the vital nature of information, innovation and influence in terms of creating investor trust. Would you like to elaborate on that a little bit more? Because I think it leads on nicely from what we've been saying. It's a very interesting challenge that the wealth management industry faces now and post-COVID.
Yeah. So I think just to pick up from Soumya's comments around objectivity and putting the client's interest first, clients on the other side are they have much more information at their disposal, whether that comes from their peer groups, from technology, from just the changing nature of the way that we are providing information. So I can even think 10 years ago, and some of those legacy accounts when I was managing them in various ways, the amount of information they got and the way that information was presented was pretty opaque, right? It wasn't apparent, it wasn't easily digestible, and you couldn't necessarily make sense of it. And so clients are asking for more transparency on the information. I think they are becoming better equipped to ask the right questions. What are the inherent conflicts? How are you incented and compensated? We have on our website sort of the questions, investors' rights, the kinds of questions that you should be asking. And I think, it would behoove all advisors to take a look at that and really think about how your program and how your offering stacks up against that, and be prepared to answer those two questions in an honest and fair way. So on information, I think it's not just the information itself, it's what does it mean? How do I interpret it? How does it impact the way I might respond to portfolios? What are the competing priorities? Wouldn't we all like 7% neatly distributed every single month with very little variability? And of course, that was Bernie Madoff. And so we know that that's not actually achievable. And so managing how people respond, understanding their risk tolerances deeply, helping them mathematically put it in perspective, but also behaviorally, understanding where people come from. You know, people's made wealth from corporate activities as opposed to entrepreneur activities, you know, are really quite different. And it's incredibly important for advisors to understand how other assets that may not be managed by you really fit into the overall landscape of risk and return. The second is innovation. And this is one where I think COVID has accelerated the impact of technology and the way we viewed client relationships historically. So I can, you know, what we hear from around the world is that clients who used to come to your offices, that white glove service, now are very comfortable using Zoom, and so are we as advisors. The technology is getting better. I was talking to a former client of mine, and they just said, we're never getting in a car, battling traffic, going to find a parking spot to go into an elevator to come and see you. And likewise, we're not so comfortable with necessarily you coming so frequently to our place. And so that's pierced through a veil that I think people were uncomfortable with. They really felt it had to be done in a particular way. So with innovation, we're going to be able to use artificial intelligence, analytics to better customized portfolios. And what that drives is influence. So Soumya talked about ESG. And I think all three are clashing together right now, whether it's the environment and climate sustainability, whether it's the social consequences. We see more and more clients wanting to have impact type portfolios or at a minimum exclusionary portfolios where stakeholder practices aren't strong. And then governance, of course, remains very important when you think about just something like dual class shares. So it's all coming together in a way that clients are asking for hyper customized portfolio, which requires innovation, and they want it done cost effectively, right? They're not going to pay large premiums for it anymore. So that has an innovation and transformation effect on the firms themselves. Those who have been comfortable with technology and think about it in sort of bite-sized pieces, they've been kind of going along with it, have done probably a better job in working from home. Soumya talked about the one thing that we saw from the institutional investors in particular, and the asset owners, the big asset owners, and that was the operations. What are those single points of failure in trade execution, in portfolio construction that can be very costly? So firms that had already embraced technology were much more comfortable with that. They had the systems, the ethos and mindset in place. But when you put all three of those together, information, innovation, and influence, they're all about the client. They come from the client, they're centered on the client. And I will say the wealth management business is behind on that. While we talk about client centricity, I think it's been more lip service rather than the actual actions and infrastructure. And COVID has accelerated that. And guess what? We're able to do it. We are able to have people working from home. We are able to meet with our clients in a kind of rich and robust, but frankly cost-effective way that suits them and better meets their needs. So I think it's going to be a period of hyper change. Clients are going to demand more because the consequences are more difficult. They're more important, and the challenges are more difficult. So I think you should expect your clients to be asking more of you for the same or less.
Thanks, Marg, and very comprehensive. And those of you who haven't read the Trust Report, it is available on the CFA Institute website, and is a very good read and has some very specific commentary about APAC within there as well. I'd like to pick up on one of the point you mentioned, and this is a question maybe for both of you, and that was around innovation and the fact that the client relationship, which has always been very touchy-feely in a kind of wealth management sense, has always been face-to-face, has now had to move into a different direction. Is that asking for new skill sets from our advisors, and where are we getting them from? So maybe for Soumya, from a recruitment perspective or from a training and development perspective, are you finding that you're having to find new kinds of people or develop new kinds of skill sets?
I actually think, Nick, that perhaps one of the biggest challenges the wealth management industry is going to face in India is actually talent. And the kind of people, given the multiple shifts that we're seeing, whether it's in advisory, whether it's in digitization, whether it's in changing investment patterns. In fact, there is another area which is wealth transfer, which I think is also something that is going to impact us fairly significantly. And for each of these, I think in the past, because the client expectation is now slightly different, it's also because I think the client segments that we're going to be looking at are going to be a little different. And so I'm just going to perhaps just talk a little bit about the wealth transfer bit, because I think that that's going to mean that the kind of skills that we're looking for is going to be a little different. So when you look at largely the demographics of who are the inheritors or who's going to receive this money, which is close to about, different reports have said, I think Cerulli Associates has said 68 trillion is going to get transferred in the next 25 years. WealthX has said about 8.5 trillion in the next 10 years. If you look at that, who's inheriting this money? Now that is typically three different kind of cohorts. One, of course, is the classic, the Gen X that you're going to get money, the millennials. But interestingly, women are also going to receive the fairly big inheritors. And that's from two different lenses. One lens is that because they are the spouses of baby boomers, they have a longer life expectancy and they're younger than their spouses. So they're going to actually have control of that wealth for a good 5, 7, maybe 10 years more. And then you've got this Gen X and millennials. Now, I have a feeling that when we're looking at understanding client expectations, wealth practitioners, I don't think are ready to understand that each of these cohorts are operating slightly differently, or not slightly, maybe quite differently. And therefore, we tend to just generalize and parameterize everything across the board to say that this is the kind of service that you need. Whereas what we're going to find is that women are going to operate quite differently. In fact, a study said that when women actually inherit wealth, they change their advisors. 70% of the time, they take a new advisor. So are we ready for that? The fact that that's definitely perhaps going to happen. And then when you've got Gen X and you've got the millennials, it's people who are clearly much more comfortable with technology, looking for wealth with purpose, wanting to make sure that their investments and what they're doing with their wealth is for social good. I think these are all things that are going to kind of play out, and each one of them means a different portfolio construct. You can't have the same portfolio that you may be advising in terms of women, as opposed to what a Gen X has inherited, as opposed to a Gen X who's a founder, who's opposed to, let's say, an inheritor who's a millennial. And each one of them is going to be asking a whole lot of different questions. Question then is for the wealth practitioners. Do we have the skills to be able to address each of those? And are we expecting too much from our people in terms of you're going to be the jack of all trades and the master of none? Because they're going to ask you questions beyond just investments. They're going to ask you about trust. They're going to ask you about estate planning. They're going to ask you about philanthropy. They're going to ask you about impact investments. And are we qualified? Are we ready to have those conversations, or are we just going to expect way too much from our people? So I think big challenge is going to sit there, because at least for a place like India, it's going to become more like, how do you deliver personalized service at scale is really going to be the issue for a lot of wealth practitioners in India, because ultimately India is about scale. It's not just about one city or two cities, it's multiple cities, and these requirements are going to come up. So those are some, I think people are going to be, is probably going to be our biggest challenge, and how we train them and get them ready.
Well, you have a lot of, you have a captive audience in terms of advisors on this. And I think you laid out very clearly that broader range of not just skills, but interests that advisors will need so that they're able to have these conversations with their clients. Marg, I mean, is that a challenge that CFA Institute is responding to? I mean, how do you see it shaping our own strategy as we move into a sort of more professional learning environment?
Right. So I see two things to it. And one, I want to respond to Soumya's identification of it's going to be more challenging for our people. So one thing that we have been big proponents of, and you can expand this on in ways of what kind of talent you have, is making sure that you have diverse teams. So, certainly in the developed world, the wealth management business has been dominated by male advisors, and of very little diversity at that. And so you can see, as just a woman practitioner for a long period of time, I would sit there and just be amused and bemused at sort of how those meetings were conducted. And there was nothing ill-willed about it. It was just a lack of understanding. And yet most of my colleagues and most of the teams I ran were men. And so we really spent time, first of all, training people on those skills, and they're trainable, the first thing. So that's important. And CFA Institute has a plethora of professional learning, but we're pulling it together in a much more dynamic, competency-based way. So thinking about the skills that are required for particular jobs, and then curating our professional learning for that. So stay tuned, because that'll be coming out soon. And that includes both technical skills, thinking about how you build portfolios for individuals is really quite different than you do for a tax-free sovereign wealth or institutional or pension plan. And then the second component of it is, how do you have those behavioral skills, the ability to understand clients' real risk tolerances, to ask the right questions. We tend to be purveyors of information, confidently delivered and having the answers. So much of the skills we're going to have to learn is how to ask questions and how to know what we're looking for. We do think that, again, technology aids that. Removes bias from advisors, and we're seeing just tremendous technology. And so but I will make a big case for thinking about team construction and building diverse teams. And one thing we anecdotally have seen through our inclusion and diversity team, and Sarah Maynard heads that at CFA Institute, and I would encourage all of you to go to that, is that people to our website, where we have our inclusion and diversity strategies and tactics that you can tap into. What we anecdotally saw was that teams and companies that had already embraced inclusion and diversity responded much more agilely, much more effectively, and much more calmly to the changes that COVID foisted on us immediately. So my pitch is to think about how your teams are constructed. And do you have the right diversity in place? Are you even conscious of the diversity that you need? So it's not just ethnic, and it's not just our visible minority. It's not just gender. It's really thinking hard about what are the talents and skills and capabilities that you need at the table. Some may be present in your team, you may want to partner with other firms. And then how do you nurture and embed and capitalize on that diversity? And there are really two phases to it. So I would encourage all of you to go to our website. We have 20 strategies for inclusion and diversity, and we're doing an experimental partners program with some of the leading asset managers that are sharing their experiences with it, what works, but probably more importantly, what doesn't work. And I will make a case for one book that is probably the best book I've read over many years of it on diversity, and the case for it from a competitive advantage point. And that's Matthew Syed's Rebel Ideas. And I think if you're not convinced of it, read the book. and maybe we can post it somewhere on the webs on follow-up, and then think about it in context of the materials that we have in inclusion and diversity and others that you will, as you think about that competitive advantage to attract the clients that are most appropriate for you, but more importantly, to serve them really well by bringing the best thinking to them.
Thank you, Margaret. And for those of you who don't know, but I'm sure you do, both Marg and Soumya are passionate proponents of diversity, not just gender diversity, but across the piece. And they've had huge impact in the industry in that context, and should be congratulated. I'm getting, by the way, lots of great feedback. So this is
so much better than the bad feedback.
43 minutes. Now I edit the bad feedback. You know that. But ESG has come up a number of times, and bringing us back to COVID. A question for Soumya: do you think that investor attitude has changed during COVID towards ESG? It's becoming a more important proponent of investment decisions anyway, but has this sped up or changed, do you think, during the pandemic?
I think it has changed, and it's just accelerated the discussion. And I think it's really, again, stemming from the fact that the post-COVID world that we want, I think, needs to be a better world than what it was pre-COVID. And this change as well, I think, is also getting accelerated, Nick, by multiple stakeholders. It's not just investors, it's communities, it's regulators, it's companies in terms of disclosure. I think there are multiple stakeholders who are pushing this agenda. We saw it, for instance, even in terms of regulation. Recently, our regulator of the capital market, SEBI, required this responsible business reporting in terms of responsible investing to cover the top 1,000 companies, listed companies, from earlier being just 500. That was a recent development which has happened, which means that they want to see those metrics getting disclosed by at least the larger companies in India. I think from a community point of view, clearly, you just want a better world, and therefore you're going to push the agenda in terms of trying to understand in terms of whether it's air pollution or whether it's in terms of waste management or otherwise, what is it that is actually happening? I think post-COVID, we saw the air pollution, certainly in places like India, actually improve. So in many ways, you don't want to go back to that old world which you actually had. So my own sense is that the ESG agenda is getting pushed by multiple stakeholders, not necessarily just the investor, though I think the investor can play a larger role. I think the problem with ESG that we have right now is that it's driven mostly by institutions. So for instance, if there are foreign investors who are investing into India, they are putting pressure on the asset managers to say that, do you follow these ESG principles when you're investing? The problem is that our India retail investors, high net worth individuals, are they asking that question? Unfortunately, I don't think so. I think it's still a little bit away. ESG seems to be better embedded at the institutional level than it is at the individual or retail level. And I think that has to change. But that is something that maybe to start with, family offices can push because they have larger sources of capital which they're then allocating to, and they can at least push that agenda in terms of with the asset owner. So my own sense is it's multiple forces, but all geared towards the fact that we want a better post-COVID world. We do not want one which was worse, and that's going to drive things.
So I might add on to that just quickly. I think Soumya is right that the institutional investors are driving a lot of it, that there are multiple stakeholders, so there's a coordinated effort on it. So it's likely that it'll be a positive direction towards ESG. One thing we have seen though is that intergenerational wealth. Millennials, Gen Xers, women have a very different view on this. They take a much more holistic view. Certainly Gen X and certainly millennials understand the butterfly effect, right? That what an action they have can have a ripple through effect through everything. So I think you're seeing an acceleration of it. And one interesting aspect of COVID is upon analysis, you can see the E, S, and G coming together. COVID sort of clashes them all together and brings them to life in a way from a portfolio perspective that shines a light on the risks associated with paying little attention to the environment, with the risks associated with not thinking about the social aspects of how we run companies, and also society's response to it, abandoning well-beloved brands for poor practices, either in governance or in the way they organize their companies. And so I think it comes from the investment side, it comes from the intergenerational side, and then I think you're seeing an increasing regulatory, societal, and government intervention.
But while we're on that theme, Marg, could you give us a sense of what CFA Institute is doing to further the debate? Because I know there's an awful lot going on.
I'll let Soumya speak because I know she wants to get something in, and then I'll
interrupted you.
Quite interesting that and for certainly we actually had our regulator just earlier this week interestingly speak about climate change for the first time that I've heard a regulator speak about that, where they actually spoke about the fact that in 100 years the temperatures in India only increased by 0.5% centigrade, but in the last 20, it's increased by 1.8 degrees. And therefore, the fact that the regulator spoke about climate change, something I hadn't seen before. So it clearly tells you that it is on the agenda. It will come up in more discussions. So sorry, Nick, just before you got into your question.
No, and you know what, Soumya, when I spent the first 6 months traveling around the world and meeting, in my first 6 months meeting various stakeholders, it was clear, like a post right in the early part of 2020, that January, that the environment, just carbon just went hyperbolic. Everybody was about carbon. It's probably more balanced now, but I don't think it's letting up. CFA's response to ESG for the practitioners and for everybody on the call is threefold. First of all, last week or the week before, we launched our consultation paper for ESG standards for investment funds. So we had great demand and calls for action to create a standard, much like our GIPS standard, our performance presentation standards, such that investment funds could disclose the character and nature of their funds, and investors could have comparability across those funds. So that consultation paper has just been launched. It was done with 16 practitioners, experts from asset management firms and consulting firms around the world who have developed the paper, and it's now for consult, and we'll likely have the standard published for May of next year. So we've accelerated that. In conjunction to the standards, which of course we're globally known for and historically known for, and we're also known for our education and credentialing. We are just in the process of working with one of our societies to develop an ESG certificate. We know that will be important for investment professionals, be it on the asset management side or the wealth management side, as they explore that to show competency. And then finally, the third aspect is the advocacy work and research that we're doing into it. So I would encourage anybody who wants to get up to speed on it, wants to think about becoming certified on it, or wants to understand the standards for their own funds, to stay tuned and go visit our website for the work that we're doing on it now. It's really quite exciting work. And while we've had it sort of in the background, the demand for it simply wasn't there. So we've been percolating along, and now we're really at the ready for it. So again, I think stay tuned.
Exciting times ahead, and I've been involved in the debate very heavily of late, and we're looking specifically at markets across the world, including India. So as Marg says, stay tuned. And I couldn't agree with you more, Soumya. As someone who lives in Hong Kong, to see blue skies and clear skies is a lovely way to get up in the morning. So post-COVID, we need those to stay. We have about 6 or 7 minutes left. and I'm getting a few points. One challenge I had from one of the questions is everybody's agreeing with each other too much, and I don't want to throw out a question that makes you disagree with each other.
Okay.
But maybe one way of thinking about that is, what's your view of life post-COVID? Who's going to survive? Who isn't going to survive? And where do those? What is it that you're doing, Soumya, and you're seeing, Marg, that you think might be a new way of working, a new way of thinking?
Maybe I'll start from the top level, sort of from a global view, and then Soumya can round it out, bring us home with the India view. I think, first of all, the acceleration of technology, those firms who aren't innovating, I think, are going to have a difficult time. Cost structures are going to be very important, that value for money, whether it be the advice or the portfolio construction, the reporting, the hand-holding, all of that. Cost is going to be very important. So I think that those that don't have scale will be challenged. I think thinking through what your what you're delivering for clients and proving that will be important. I think the way of work, the future of work, is going to be something we are going to be talking about a lot over, certainly over the next year and over the coming years. And I think it's going to be an incredibly rich period of creativity. We'll probably get down to essentially what is it we're delivering for clients? How are we doing that? Is it effective? I think both effectiveness will be a big key concept as we challenge those sacred cows and as we revisit our operating models, our delivery models, and essentially what it is we do for clients. I'd challenge all of you to go on to people's websites and look at what their mission is. And if you didn't know what our business does, you'd be hard pressed to understand it. It's hard for clients often who don't speak the language of wealth management, who don't speak the language of investment management, to really understand what we do. And I think as we're challenged on our core business, I would encourage all of you to just spend an hour and go through websites and see what people say and see if you can really understand it, and then how your business practices and business operations line up against it. Because I think that's what we're seeing is a real acceleration towards transformation of the business.
I'd largely agree with practically.
Oh, come on.
Because it is going to percolate in that way down to India as well. I think what a lot of wealth practitioners in India are going to have to look at is this whole issue around costs and scale, because margins have been under pressure in the wealth management business in India. What was earlier considered the norm is now being challenged literally by the day, by regulatory pressures and otherwise, which means that wealth firms are going to have to decide which side they're pretty much sitting on. Is it distribution? Is it advisory? Ultimately, in the longer term, advisory businesses actually generate more revenue in the long term because it's annuity. But for a lot of smaller companies, it could be very challenging in a post-COVID world where their margins are under pressure, and you will see consolidation in the industry, is my sense. The other is, I think we also need to adapt to the operational risks that we're sitting with in moving a lot of things digitally and a lot of things virtually, which I'm not sure that we're fully ready for, whether it's in terms of cybersecurity or otherwise. I think that's going to be a big challenge that at least CEOs of firms are going to have to look at very closely in terms of the fact that their staff are going to be in different places, and whether it's data security, privacy, all that is going to come to the fore. I think we also need to recognize that clients are probably going to have a lot more choice. And because they have a lot more choice, they're not going to be as loyal as what we probably had. So you're going to have to continuously be able to deliver service at that very highest level to make sure that they continue to stay with you, because they will have more choice, they will be less loyal. And it could be both sides, both employees as well as clients. So that is something that, again, one needs to look at when you're looking at it from a firm's point of view. So, but it's also at the same time an extremely exciting time for India. I think the fact that we're just at that point where we're unlocking wealth, and clients and people are coming into liquid wealth, and wealth is moving into financial assets, which was not the case in previous generations or otherwise, means it's an enormous opportunity for people in the industry to really be able to contribute to that growth, be successful for themselves as individuals and wealth practitioners, and also at the same time to help clients navigate the next 5 years, 10 years. So very interesting times for India.
That's a fabulously optimistic note to bring us almost to a conclusion, Soumya. So thank you for that. But I have, in the 1 minute we have left, I have one question for both of you. You're clearly neither of you sitting in an office. What is it that you are most looking forward to? And maybe it's one word or one sentence. When the so-called new normalcy comes back to us and life gets back to something that we sort of recognize. Maybe I'll start with you, Soumya.
I think going on a family vacation is what I'm waiting to do, and just travel. I kind of missed that over the last, so really meeting family and getting together in a lovely vacation.
And Marg?
I would say travel, but I dearly miss the small connections with people where those spark conversations occur. They're random. Now there's nothing random. You got to plan half an hour at a minimum for a Zoom call. So I actually miss what comes from being physically present in spaces with people. And I hope we'll get back to that in the not too distant future. And one of the first trips I took on my, when I was at CFA Institute, when I first joined, was to Mumbai. And I loved it. And so I am, one of my first places to travel back to is back to India. I just found it spectacular. So one day.
On a bike as well, I remember. So,
on a bike as well.
Can I just say thank you to both of you for what's been a fascinating hour, covering an awful lot of ground. I do hope all of you on this call have got value from it. As I said, my phone is going red hot here in terms of people thanking you for the quality of the debate, and lots of requests for Matthew Syed's book, Marg. So next time you see him, you can tell him you did him a big favor on this call. Thank you very much to both of you. Thank you to all of you for listening. And I'm going to hand back now to Bidi.
Thank you.
Thank you, Nick. And Marg, we are certainly looking forward to have you again in India whenever you can make it. And thank you for sharing your insights, Soumya, Marg, and Nick.